Yes, good evening, everybody, and welcome to the revision class in preparation for November 2025 diet for performance management. So tonight we are going to be talking about budgeting and budgetary control. Budgeting and budgetary control. It's a very important aspect of the syllabus, which constitutes 20% of the syllabus. Is the second ranking in terms of percentage, in terms of the weight of the syllabus. So based on that judgment, you will discover that it will be very slim for you to escape question from this aspect of the syllabus. And that is why I'm coming up with it based on the analysis I've done. Question is likely to emanate from these aspects of the syllabus. So when we talk about budgeting, budgeting is an essential tool for the management accounting. Yes, in both planning and controlling future activities. The management accountant is in need of budgeting. Is a tool that management accounting requires, or management accountant requires, for planning and controlling future activity. Now, those days, if they ask you what is budgeting, you say budgeting is a way of forecasting into what will happen in future. For those doing PSAF, budgeting is also a very key aspect of that particular course. So budgeting is a form of financial summary about future income and expenditure. In the government palace or in the accounting palace, is usually within a 12-month frame. It has a timeline. And why is it having a timeline? It's for you to be able to measure performance. Yes. But when you don't have a time frame for your budget, it means your budget is open. And for you to actually perform evaluation will be very difficult in terms of budget. So we compare budget with actual performance. Budget is what you have on paper, while the actual is the real time, what actually happened when activity is going on. So budgeting is important because it aids in planning. When you have a budget, you can plan easily. As a female, I know most of you know how to plan very well. You know how to keep lists of activities very well. So before you go to the market for shopping, you already have your list. As you are buying, you are ticking. As you are buying, you are ticking. So anything that is not in your list is not part of what you should buy. And sometimes there can be something that is enticing to you, and you might try to go outside your budget. So one thing with budget is that it helps in planning. It helps one to be coordinated. It helps organization to be rightly coordinated, and it enables you to control your expenses. You've made a plan that you are giving so value of money to a particular raw material, to labor. Now, anything outside going above your budget, you try to control it to see that you are within the framework of your budget. So budgeting aids in planning, it aids in coordination, it aids in control. And when you plan, when you make a budget, let's say in terms of labor, and you discover that this tax will be too cumbersome for me, you can delegate, you can authorize that somebody else should oversee this aspect of this activity. Because with budget, you discover that there are various segments of your activities. So each segment can be handled by different individuals, and it will make the work much more easier and less laborious. So budgeting helps in delegating, it helps in authorizing, and more so, budgeting helps in evaluation of performance. Yes, it is when you know where you are going, then you can now ask yourself, have I arrived there, or I'm yet to arrive there? Why are you asking yourself that question? Because you have a plan already. So, but when you don't have a plan, everywhere will look like a destination. So when there is a plan, you'll be able to ascertain, have I achieved my plan or not? So When you have not achieved your plan, you'll be able to check side by side with your budget. Where am I? So if you still have some miles to cover, fine. It shows that you've not achieved your stated plan. And where you've tried all possible means and you've not achieved your stated plans and you've exhausted your resources. So you compare your actual with your performance, with your budget. Where your budget is less than your actual, and where your actual is less than your budget, it means there is variance. But where your budget is equal to your actual, it means there is no issue of variance. So you can see budget and variance are two topics that can be joined together to evaluate you, to test you in the exam hall. So benefits of budget, which I've talked about, that is aid in planning, coordination, controlling, evaluation of performance, and it also helps in delegating and authorizing tasks. And more so, budgeting held in communicating and motivating. When you have a plan and you've performed your own aspect of that task, it means there will be somebody else to perform, to act on a role. For those of you who work in an accounting organization where you use software to perform or to make payments, you discover that you can have an initiator, you can have a reviewer, you can have a finalizer. So with budgeting, it means there is a plan already that once a payment is to be made, once a tax is to be done, somebody should initiate, somebody should review, and somebody should finalize. So with that plan, it shows that a means of communication have been set, which will aid proper organization. And with budget, you can be motivated when you surpass your budget. You can be motivated. Staffs that surpass their budget, those in the sales department that goes out to make sales, who are on weekly, monthly target, when they surpass their target, they'll be motivated because the organization will definitely give them a bonus. Yes, that is some. And with that will be achievable because there is a budget, there is a plan. But where you don't surpass your budget in terms of sales now, in terms of revenue, it means there is need for improvement. So, but when there is budget, it is when there is budget, you'll be able to evaluate each of these to see if you're actually performing well or not, because there is a benchmark already. But when there is no benchmark, you will not be able to ascertain that. So budgeting and budgetary control is a systematic and formalized approach for performing significant phases of the management, planning, and control of functions. So it is a process of preparing detailed short-term corporate plan into action. But when monetary values are attached, the plans becomes a budget. So we've talked about most of these things during our normal classes. One addition I want to make, which I've talked about before we start the recording, is the issue of ethics and sustainability. When you go to your study pack, you see it, ethics and sustainability. Now, talking about the issue of ethics, how does this relate to budget? This activity is performed by human, by people, by staffs, by employees in an organization. So budgeting is not only a financial exercise, but also a process that reflects an organization values, integrity, and long-term vision. Because when you talk about ethics, you're talking about character, you're talking about values. Yes, what is your value? Why are they bringing this into the syllabus, into every course? The issue of ethics and sustainability is there because as an accountant, a chartered accountant, the issue of integrity is very key in whatever we are doing. So that is why they are bringing this in. And that is why they've removed the issue of CSME and trying to spread it across every course. So, as I've said, that budgeting is not just a financial exercise, but also a process that reflects an organization values, integrity, and long-term vision. So ethical and sustainability consideration ensures that resources are allocated responsibly and that the budgeting process promotes fairness, accountability, and environmental and social responsibility. So by the time you are preparing your budget, you must take into cognizance the environment. Likewise, it's very important because when there is no environment, you're not sustaining the environment, your business cannot operate as expected. So ethics in budgeting involves ensuring honesty, transparency, fairness, and accountability throughout the process. Because there can be a scenario question and they try to test if an organization is ethical in its budgeting process. So you must open your mind wide when they give you a scenario question and the question is now trying to ask you to write what are the ethical issues this organization is facing. So you must be able to read from the scenario and bring out your points and develop them in response to the question. So the issue of ethics is being introduced into budgeting. If you check the old pack, you will not see it. I don't think it's there. It's not there. So going through the new pack, you see the issue of ethics and sustainability. So, and that is why I'm talking about it. So the issue of ethics, as said, has to do with issue of honesty and accuracy. So budget figures should be based on realistic assumptions and verifiable data. So deliberately overstating or understating revenues and expenses to manipulate outcomes, such as securing more funds or creating artificial savings, is unethical. Now, in budgeting, when you when you overstate your expenses and understate your revenue, what do we call that in budgeting? What do we call that in budgeting? It is called budget slack. Budget slack. Budget slack. Yes, because you are understating your revenue so that you'll be able to beat up performance measurements. Maybe they are trying to evaluate your performance. So you are not trying to bring down your performance yardstick to be very low, so that when you don't perform well, at least you still be able to meet up with that standard you've set for yourself. And now you are now overstating expenses. You are overstating expenses so that you'll be able to 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 spend frivolously on things that are not necessary. It means there is a slack in your budget. Your budget is not realistic. It's not justifiable. So when you are overstating expenses and understating revenue, it means there is a budget slack. There's an issue with your budget. So ethical budgeting demands accuracy to maintain stakeholders' trust. As you work in organization, people have entrusted their trust in you, as maybe shareholders have given you a mandate to help them perform or do the day-to-day running of their business. So by the time you are not doing things in a free and fair manner, it means as an accountant, you are not being ethical in your tax. So the issue of ethics also cut across issue of transparency and accountability. That all stages of budgeting process should be open to scrutiny. Yes, that decisions about resource allocation should be well documented and justifiable. Yes. So because this will help to reduce issue of fraud. It will help to reduce the issue of favoritism. It will help to reduce the issue of misuse of funds. Yes. So these are issues of ethics, and more so we can talk about fairness and equity. All these are issues of ethics. Now, talking about sustainability, Sustainability. Sustainable budgeting integrates issues of economy, it integrates issues of social and environmental goals into financial planning. So as you make your budget, you must consider the environment. Consider the environment likewise. That is, you must look at the societal well-being. Yes. There are some organizations where they don't use paper to communicate. All what they do is on mail. So issue of writing memo, writing this is discarded because they're trying to preserve the environment. Yes, by not encouraging people to cut down trees to produce paper. Yes, so all what they do is online. Issue of paper, this, that, they'll just tell you, please find attached, please do this, please do that. Is a way of supporting sustainability. So the issue of budget should allocate funds to environmental friendly practices such as energy efficiency, waste reduction, renewable energy, and even green procurement, because these will reflect commitment to sustainable development and reduce long-term environmental risks. When you continue to deforestate, to cut down trees in order to produce papers, to produce certain office materials, and so on and so forth, it will hamper the environment in the long run. So as you make your plan, you should reduce the costs of buying certain things that will harm the environment, and you should also increase benefits that the society will get. Yes, you shouldn't pollute the environment with your waste products and the rest of it. Even when you pollute the environment, what are the benefits the community that is experiencing this hazard will get? So all these are issues that budget we have to consider as at today. So these are current issues that have been introduced into the syllabus of budgeting. So you must know all this. So the issue of sustainability is that we must preserve our environment. Even as we plan, as we make budgets, we must make plan to see that our environment is preserved, because budgets should consider the social impact of decisions, including the employee welfare, the community development, likewise, even human rights. For example, cutting costs at the expense of fair wages or workplace safety is unsustainable and unethical. When you're trying to cut costs by reducing workers' salary, by not providing the necessary safety boots, the necessary safety equipment that the workers need, is not a good one. Yes, it's an unsustainable practice that should be frowned at. So you should increase the cost of sustainability in your budget so that the workers can be happy, the environment, the community can be happy, and everybody will work fine. So these are some of the things that are being added to the syllabus, to the topic budgeting, and that is why I'm talking about that, instead of just running to do some calculations and the rest of it. So I have to talk about this so that when you see question on them, you will not because I know some people don't go through the study pack. Yes, so we have to balance it up. We have to balance it up. So the issue of sustainability budget incorporates the assessment of environment, social, and governance. Yes, so it recognizes the risks. It recognizes risk that help prevent future costs arising from penalties of an organization not abiding by these rules of sustainability. And when you abide by the rule of sustainability, it helps to improve or increase the reputation of the organization in the eyes of the society. So all these are very key. You can refer to the study pack to read more on this and take down some notes. Yes, and when you read, try to meditate and put down some notes on your own. Yes, try to what you read, try to write them down again on your own. Yes, you might think, I've just studied this, that. Try to create notes, personal notes for yourself to reflect back what you've studied. It will help you in a very in a large extent, because sometimes when we see theoretical question in the exam hall, it will flash that you've seen this thing before, but you cannot. Sometimes students might not be able to recall how to put those words together. But when you practice the act of note taking and reflecting back on what you read by putting them down by yourself, it will help you very well. To help you very well, and you can relate some of these things you are reading to real world scenarios, so that when you try to forget, because there are many things to read. So sometimes what I do is that I attach some of these things to real world scenarios, maybe to my office, to my yes, to my environment, and the knowledge will stick to me. Yes, rather than trying to cram. You cannot cram everything. Just relate them to what is happening around you, to your economy, and you'll be fine. So when you see questions on them, you'll be able to put them down as expected. So I've talked about these benefits of budgeting. Now, in preparing budgets, there are various stages, most especially production budget. There are various steps you must follow and that you must know. Now, the principal budget factor is what? Let me ask this question. What is the principal budget factor? This revision class.
Sales.
I think sales plus
Yes.
open inventory. Less. No,
Sales.
that one is production budget.
The sales budget, I think.
It says
The principal budget factor in budgeting, the process starts from identifying where there is an identification of maybe the principal budget factor. It is a factor that limits the organization from achieving what they want to achieve. And the principal budget factor is the sales budget, because where sales activities are hindered, other budgetary activities cannot be achieved. Hello?
Our tutor is no longer with us.
So,
Yes, sorry about that. I, yeah, so I was talking about the principal budget factor, which is the sales. Sales budget is a budget factor, most especially when you're talking about production budget, because what will determine what to produce, what you have to produce, is the sales. Is the sales, because you don't produce what you will not sell. You don't produce what you will not sell. It is your sales budget that will determine what you have to produce. You must have this understanding. It is your sales budget that will determine what you have to produce. Now, what you will produce, the quantity you want to produce, the quantity of finished goods you want to produce, will determine the quantity of raw materials. The quantity of finished goods you want to produce will determine the labor. The quantity of finished goods you want to produce will determine what? Your factory overhead. So your sales budget determines your production budget. Your production budget determines the quantity of raw material, the labor rates, the labor hour, determines the factory overhead, and so on and so forth. So it is when you know your sales, then you can know what to produce. When you know what to produce, you now integrate what are those factors of production that I need to come up with a finished goods. So That is how it flows. So if you reflect back, some questions that we solve, you must first determine your sales budget. It is your sales budget that will lead to any other budget that you need to prepare, So let's take note of that. So question can come in form of production budget, in form of cash budget, in form of flexible budget, in form of flex budget. In these four ways, question can come in that regard. So you must arm yourself with these various aspects of budget. Like in the last diet, the question was on flexible, yes, flexible budget. Yes, flexible budget. Question was on flexible budget, the last diet. So in this diet, it can be in another dimension. But that does not mean you shouldn't go and learn what flexible budget is. We treated that in one of our classes. If you are not in that class, I can forward the video to you and you see how we treated issues on flexible budget. If we have time, we can decide to still solve that question again. Yes. So it depends on the time, but don't wait for us. Don't wait for the class. Go ahead to do what you're supposed to do. Yes. Go ahead to do what you're supposed to do. So this is the principal budget factor. That is the factor that limits the activity for the budget period. Normally, this is the level of sales, and therefore the sales budget is usually the first budget to be prepared, and this leads to others. That is the principal budget factor. So let's quickly look at the question I forwarded to the class. One of the questions I forwarded to the class. Yes, I think this is the question. Even though tiny, this question is the one I forwarded to the class. We've treated it in normal classes. Decided to come up with it again because it will to open your mind to certain things. Likewise, the second one that we are going to solve if time permits. Now, can somebody read this question? So it's not clear. You can use the one on your phone if you think that one is clear or clearer. Yes,
Ozi
anybody?
Money Nigeria Limited is a company that is into buying and selling of plastic containers. The company is financed by a capital of 50 million naira, inclusive of reserves, in a mix of 30% and 70% of debt and equity, respectively. The company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales, purchases, and inventory management. The company's policy on sales is to ensure that sales are collected as follows. I, cash sales is 40% of the monthly sales. II, the balance of the month's sales is to be collected in the month following sales. The policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the months following. The company's stock policy is to reserve 30% of the month's purchases as a closing inventory. The following information is available for 5 years, 2010 to 2014. Monthly sales, monthly purchases, monthly salaries, monthly rents, monthly cash expenses. Additional information. The company purchased a motor vehicle in July 2013, which was paid for in September 2013. The cost of the motor vehicle was 5 million. Annual depreciation for the motor vehicle is 20%. The cash balance as at 31st December 2011 was 4 million. The company's salaries, rent, and expenses were paid in the month they were due. Required. A. Prepare a profitability statement for 2012, 2013, and 2014. B. Prepare a cash flow statement for 2012, 2013, and 2014. C. Determine and comment on the liquidity ratio. for 2014. D. Compute the gearing ratio.
All right, thank you very much. This question will help you also in financial management. There are questions like this in FM, and it will aid your understanding further when you see such and how to treat certain things in financial management. So, looking at this question, that we are to prepare profitability statements for 212, 213, and 214. But there are certain things you must understand. You must be able to interpret in this question that the company is financed by a capital of 15 million, inclusive of reserves, in a mix of 30% and 70% of debt and equity, respectively. What is the interpretation of this? First and foremost, we've talked about
You mean that? Good.
okay, that the company is geared, right?
Yes, sir.
Because there is an element of debt in it. Yes, but what is the percentage of debt? What is the percentage of equity? As in the percentage
Equity
of,
is 70%, debt is 30%.
yes, so applying
more on that.
yes, so applying this percentage to 15 million, what is the value of equity? What is the value of equity?
10.5.
The value of equity?
10.5.
10.5.
10.5.
10.5.
4.5 debt.
That is, if the whole capital is 15 million, 30% of 15 million will be what? 0.3.
4.5.
500.
4.5, right?
Yes.
Fine. Now, it means 30% of 15 million is 4.5. So the 70% of 15 million is what?
10.5.
10.5. 10.5. Okay. Good. So you must be able to interpret in that order. So the company has been in trading business for the past 6 years and has consistently adhered to its corporate policy on sales, purchases, and inventory management. Take note, 3 items there: sales, purchases, and inventory management. It means that they have a policy in which they stick to over time. So the company's policy on sales is to ensure that sales are collected as follows. Sales are collected what? As follows. Look at it. Cash sales is 40% of the monthly sales. Cash sales is what? 40% of the monthly sales. The balance of the month sales is to be collected in the month following sales. What is the interpretation of this? The sales in January, the overall sales, total sales in January, 40% out of that sales is what? Is cash sales. Cash sales. The remaining 60% is what?
Credit
sales.
And it will be due when? It will be due when?
Following month.
The
Next
balance,
month.
yes, next month. The balance of the month sales is to be collected in the month following sales.
So,
It means 60% of the sales in January will be collected in what? In February.
February.
In February. Fine. When you follow that procedure, it means in a year, the total sales in a year, when you collect your credit in January and February, your credit in February, you collect it in March, in that order, it means there will be an overlap. It means the sales in December December, the credit element will be due
January.
in which year?
January.
January next year. Will be due January the next year. Please take note of all this so that when we start showing it in table, you not get confused. So what that implies is that when you compute your total sales, when you compute your total sales, look at it, look at the question. You can see 210, very confusing. 210, then you can see monthly sales, 3.4, 211, 3.6. So the question is this: what are you going to do? For you to get the total sales for 212 or for 211, let me start with 211. Somebody will ask, why am I not starting with 210? If you read the question, they ask us to prepare for what? To prepare for feasibility statements for what?
For 2011,
For
2012,
212.
13.
213 and 214.
Yes, but because we will need some elements in 211, let me just use these as an explanation. The total sales in 211, the total sales in 211 will be what? If the monthly sales evenly spread is 3.6, it means in January you have 3.6, in February you have 3.6. So the total sales in 211 will be what?
43.2 million.
Fourth.
So multiply by 12.
Yeah, so 3.6 multiplied by 12, you have what?
43.2 million.
Fine, 43.2 million.
Million.
43.2 million. Fine. You know, that is the total sales. At this point, we are not separating cash or credit, isn't it?
Yes, sir.
Now, but the question make it clear that cash sales is 40% of the monthly sales, and the remaining balance will be due. So now, to make it easy for you, you know the total sales for 211 is 43,200,000. So 40% out of that value will give you what? Your cash element. Will give you your cash sales. So 60% out of that value will give you what? Your credit
Credit.
your credit sales. Your credit sales. But take note that your credit sales is for the whole of 12 months, right?
Yes, sir.
Yeah.
Take note, by the time you are doing your computation in your cash flow, you will remove the value of 1 month, because that of 1 month will be due, of December will be due next year. Of 12 will be due next year, January 2012. Are we getting it, please?
Yes, sir.
If you are not getting it, please speak out. All right, if you are getting it, fine. So it means that the outstanding that will be due in January will be a cash flow in January 2012. A cash inflow in January 2012. So let's understand that. Let's move further. That the balance, okay, the policy on purchase, read this again. The policy on purchase is an agreement with the supplier's policy, which is to pay for all supplies in the month following. You must be able to interpret English. Once you can interpret English, you are 50% done with this course. Yes, you are 50% done with this course. You must calm yourself, no tension, read line by line, and you'll be fine. So the policy on purchase is an agreement with the supplier's policy, which is to pay for all supplies in the month following. It means if I should order for raw material this month of October, the payment will be due when?
November.
November. Fine. The company's stock policy is to reserve 30% of the month purchases as closing inventory. If I should purchase 12,000 naira worth of goods this month of October, what will be my closing stock?
How much do you call it?
30%.
30% of what?
12,000.
12,000.
3,000.
3,600.
Yes, 3,600. That is the interpretation. It means that, take note now, month, they didn't say year. It means that if you want to work based on that, your closing stock as at the end of 2/12 will just be what? 30% of the purchase in December, which is 30% of 2.8. Is it 2. I'm not talking about 2/12 now.
Okay.
Yes, 2.8. Yes. So you must take note of that. So the question has a mix of month and year. It is your month. It is your months that make up what? Your year. It is your months that make up your year. So you must understand. They're giving you the values in months, but they want you to solve in what? In years.
Yeah.
So you must be able to put your computation down in that order. So without much ado, let's respond to the question. The question is telling us to do what? Okay, let me still add some highlights. The additional information that the company purchased a motor vehicle in July 2012, which was paid for in September 2013. The cost of the motor vehicle was what? Was 5 million. Was 5 million. Now, looking at this question, the company purchased motor vehicle as at the middle of the year. So July 2013 to December 2013 is how many months?
6 months.
6 months, right? 6
Yes.
months. Fine, it's 6 months. So now, looking at this question, if you are to charge depreciation for 2013, how are you going to prorate your depreciation value? That annual depreciation for motor vehicle is 20%. 20%. So if you are to charge depreciation, what will happen? Your annual depreciation. All right,
So
right on.
20% of 5 million multiplied by 6/12.
Very good. Yes, very good. Because the machine was purchased as at what? July. In July.
July.
So you can't, July to December is how many months? It's
6 months.
So 6/12 multiplied by what?
Depreciation.
5 million multiplied by 20/100. You get your value of what? Depreciation. But when you now move to the next year, that is 2014. What will be the value of your depreciation? You know, you have a full year now.
Full, yes.
It's
So-
multiply it by
20%.
2.
You charge it full, sir.
Multiply
Yes.
by 2.
So it will be
The 20% of the cost price, yes.
it will be 1 million.
1
It will
million.
be 1 million. So let's present this very fast in a table. You know, this is the second time we are treating this for some of us in this class, but just to refresh our memory, we are coming back with this again. So I want us to solve this and one other question very fast. So Ozubondu Nigeria Limited.
So,
Okay, man. Ozubondu. What is the minimum? Let me ask. I have more of the Eastern people in my class this night. So what is the meaning? Let me learn.
It's just like a savior.
Savior.
Most life as in
So Maybe
Direct meaning is someone that
maybe
saves
this
people life.
this question will save people's life. This diet.
You do.
So, maybe this one will do number one question.
Ah, I really both know.
So you must understand it. You see it. You see the element of it in performance management and in financial management. So just have a good understanding of it. So the question wants us to prepare profitability statement for 212, for 213, for 214. Now, looking at the element of the question, for you to determine your profit, what are those components that you have to look out for?
Sales.
Number one is sales. So the sales for 212 will be what? The sales for the year 2012 will be what? Total sales now.
It will be
50 million.
2 times 12.
50 million
It's
400.
50 million 400,000.
Yes, and for 213, it will be what?
57
57
million.
million 600,000.
6,600.
Yes. In case you are imagining where we are getting it, see it 4.8 multiplied by what?
By 12.
12.
12. You get the overall sales for 213. So we have 57, 600,000. And then for 214, it will be what?
86,
7.2.
400. So I think we're supposed to start by
400.
211.
All right. Well, no problem. If there is need for us to get that, we'll do that. But the question is saying prepare profitability statements for 212, 213, 214. When we get to maybe our cash flow, where we need information from 211, we'll branch there. We'll branch
We
there.
can do 211 in our working set, so no problem.
All right. So now, moving forward, we can, since we're trying to get our profit, and I want to solve vertically. Yes, vertically, not horizontally now. You know, if it is horizontally, you start with opening stock, add purchases, isn't it?
Yes,
Less.
sir.
Now I want to solve vertically. What will be the next thing now? At this
Should
point,
be
Cost of sales.
cost of sales.
Not closing stock.
we have closing stock.
We
And
add
most people are
closing
not used
stock.
to that partner. You add what? You add
Opening
your,
stock.
Cases, less closing stock.
at this point, you add your closing stock.
Closing stock.
Yes.
Okay.
Closing stock.
Less
You add
purchases.
closing stock, less purchases. You
Purchases.
add opening stock.
So now for 212, what will be the closing stock for 212? I've explained this before, right? That the
30%
policy,
30% of
The
2.8.
month purchase.
so and that will be what?
the sales for that month, the month is
840.
840.
40.
All right, fine. So add closing stock 840 for 212. For 213,
960.
950.
you know
It's
the
960.
yes, you know the closing stock. Somebody might be confused that why are we now just using a month value to get our closing stock? Let me explain. The closing stock in January will be the opening stock in what? In February.
February.
The closing stock in February will be the opening in what? In March. So when you go to November, the stock will keep moving month by month like that. So as at December, the the closing stock will be moved what to the next month. So just understand it that way, because somebody will say, why are we not multiplying this by 12 to get, there can be various school of thoughts, but get the understanding that closing stock in 1 month will be the opening in the next month. And that is why we're just picking, using that of a particular month. So you don't accumulate closing stock and say multiply by 12. Get that understanding. So now for 214, it will be what?
1,440,000.
1,440,000. So when you sum up, you're going to have what? It should be 240. And this should be what? And this should be 58,560. And this should be what? 87,840. 87,840. So what do we do next? With less purchases, right?
Yes, sir.
With less purchases. The value of purchases for 212 is what?
8
For
million.
212. Say it, monthly purchase, 212, 2.8, right?
Yes, 33,600.
Multiply by
12.
12, 33,600. And for 213 to be what?
38,400.
And for 214 to be what?
57,600.
7,600. What will be the next thing?
Opening
Add
stock.
purchases.
Opening stock.
Okay, sorry. Add opening stock.
As a professional accountant, this is the approach you have to use. You know, it's when you're in secondary school, you do that C method. When you look at your financial statements in your organization, they will not do tabular approach for you. So, and this is a professional exam. You adopt the professional method. So the opening stock in 212 is 720, in 213
840.
840.
Yes, the question is, how did you get opening stock in 212?
That's the case for 211.
2.4.
2%. 30%.
Up 20, yes.
Fine. In case you are not getting it, you know the closing stock in 211 will come as what? The opening stock
Of
in
212.
212. So, and for 214, it will be what?
960.
960.
If you look at it from this angle,
Now,
you
I
see
see your screen. Is it on?
I think it's your network.
if you see it here, the closing stock in 212 is the opening in 213. The closing stock in 213 is the opening in when? In 214. You can see it. So when you do your plus and minus, the gross profit will be what? For each of the years. Gross profit
16,920,000.
16,920,000. And for 213,
19,320,000.
320,000.
19,320,000. And for 214,
29,280.
so this is your gross profit.
29 million.
And the question is saying prepare a profitability statement. So we need to get to the core of our profits, the real profits. We need to move further and determine our net profit. So when you are determining your net profit, what are the things you have to look out for?
Expenses.
Expenses. Salary.
Expense.
Salary.
Your
Rent.
expenses. Going by the question, what are the expenses?
Salary.
Rent,
Salary, rent,
cash
depreciation.
Depreciation, right?
depreciation.
So for 213, the value of salary will be what?
Also cash expense.
430.
516, 2013, 5160.
Okay, for 212, the salary will be
512. 516.
516.
That's what they name is, so.
for 212, 213, it will be what?
Same. 5
Same.
million.
Okay, all is same value.
No, 214 is different.
240 is 480. That's 5760.
Okay, salary is 480 years. So we have it as
5760.
what other expense do we have?
Rent.
Rent.
Wow.
You have rent, and the value is what?
1.2.
What?
It's fixed.
That is 100,000 multiplied by 12.
12. And it's
1,200,000, yes. 1,200,000. You're not getting what we are doing. Can you speak, please?
Okay.
I'm not getting it though.
The opening stock, I got disconnected how we got the opening stock.
Okay. Yes, somebody has said on a very low key that I'm not getting it. I didn't see the person. I was on that page. Who is the person?
It's me. It's me. I'm
Madam
trying to, yes, sir. I'm trying to see why the salary is there. I'm seeing the salary of 430 for 2013.
Yes, that is monthly value.
Okay.
When you multiply that monthly value by 12, you have it as what?
Okay.
So
Thank you, sir.
for the opening stock, you said 720, right?
Yes, sir. Yes,
Go
sir.
to 211. 211.
Okay.
How do you get opening stock? Based on the question that the company stock policy is to reserve 30% of the month's purchase as closing inventory. So as at 211, the closing inventory in 211 will be the opening in what? In 212.
Yes, sir.
So the purchase in 211 is what?
Okay. I got
2.4.
30% of 2.4, 720.
Yes. So is that fine?
Understood now. Yes, sir.
All right. So the next,
Cash expenses.
okay, cash expense. Cash expense. On the question that monthly cash expenses, okay, for 212, it will be what?
2,880. 2,880.
880. And for 213, it will be what?
3,360.
And for 214, it will be what?
4,320.
Any other expense?
Purchase of motor vehicle.
Okay, yeah.
That's an aspect.
Yeah, the purchase is an asset. It will go where we are trying to solve our cash flow as an outflow.
Yes.
But what element of it are we
Annual
considering?
depreciation.
We have depreciation.
Yes, depreciation.
We are supposed to expense the depreciation.
Yes. So depreciation. Now, are we starting? Do we have depreciation value for 212?
No.
So for 213, it will be
For
what?
500,000.
500,000.
Yes. How do we get that? It's 5 million multiplied by what? 20% multiplied by 6 over 2. Why are we doing that? Because the machine was purchased as of July.
In the middle of the year, in July.
2013.
Yes, so depreciation value here will be 500. In the
For
next year,
2014,
value
1 million. 1
1
million.
1 million. So at this point, I think we've captured every expense that we need. So what will be our net profit? Net profits for each of the years.
For 2012, 7,680,000.
Wait, oh.
It's correct.
For 212, how much?
7,680.
All right.
For 213, 9.1.
Okay, 7,680. And this
9.1.
2014,
this.
17 million.
So this is your profitability statement for 212, 213, 214. The key point here is, though this is having 10 marks, but the technicality is now in the issue of cash flow. That prepare a cash flow statement for 213, 212, 213, and 214. Now, when you talk about cash flow, what is cash flow? What is cash flow? Because
Movement of cash.
Movement of
okay,
both inflow and outflow of cash.
okay. So it means as we are trying to solve now, we are only looking at issues that has to do with cash, right?
Yes,
Yes.
sir.
Issues that has to do with credit, as at
Will
a
not
particular
consider.
point in time, will not be considered.
Yes.
Yes.
So we must know that. We must know that. So we must be able to separate the elements of credit and cash as at when due. We must be able to separate the elements of credit and cash as at when due. So you must be able to do that. Let's see what we can do about that. Let's test our understanding on that. That we should prepare profitability, should prepare cash flow.
Cash flow statement.
All right. Cash flow statement. Your presentation matters. Your headings, always give your write-ups very good and clear heading based on what the question wants you to do. Yes, that prepare cash flow statements. So you don't just write like that and assume the examiner will know what you're doing. Cash flow statements. Cash flow statements for 212, 213. And 214. If you have, some people have different ways of reading. Some people do read theory with their eyes. They will not make attempt to even write anything down. If you're in that category and it has not been working for you, change your style. You don't just read like that with your eyes and say, okay, this thing is simple now. I've used my eye to see it. You must learn to put things down in your work notes. I know if this is not your first time of writing, you will have such experience, so you will have known better by now. So I don't want anybody to come and write this paper again. So do the needful and move ahead. So we're asked to prepare cash flow. Now, when you're preparing cash flow, how do you arrange your table? Let me ask. This is a revision class. How will your table look like?
You have operating activities, financing activities, and investing activities.
Yes, that is very good.
Cash from person.
In another elements of cash receipts first, then you now
She
have
has
the
just
elements
given
of
us
cash
a
paid.
clear background in terms of financial reporting and strategic business reporting.
Or
Yes.
cash flow in FR.
That operating activity investment is for FR, is for financial reporting,
FR and
not
FM.
for PM.
Yes.
It's for FR.
Yes.
For this PM
It's
is
your cash
outflow
receipts
and
element
inflow.
and then your cash payments element. Then you subtract them.
Yes. Anyone is fine. So by the time you are trying to pick your investing and this thing, you discover that what you just need is inflow and outflow. So first, your cash inflow. Madam Victoria, are you still writing FR?
No, I'm done with FR. Just have these two, PM and FM.
Okay, so cash inflow. From the question, what do you think will be the cash inflow for 212 now?
It's 40% of the cash sales of cash sales. Receivables.
Okay. Receivables. Okay, very good, very good. So the receivable will be from where?
It's
the receivable will be from where?
The credit sales is the receivable.
Of which year?
For 2012 is the receivable of 2011.
That will be due in 2012, right?
Yes, sir.
December receivable
of 2011 will be due in 2012, and that will be a cash inflow in 2012. Then what would be the cash sales in 2012? I want to get something now.
It's 40%,
60% of 11 months.
The 60% that will be that of 2011 that will be due in 2012, and the 40% of the cash sales for 2012.
Okay. Okay. Yes. The 60% of December to 11. Take notes, man. Isn't it?
Yes, for that month.
Yes. Let's show the workings so that everybody will be on the same page. Let's show it.
I don't know, 60%. Where did we get that 60%? I thought we were using. Okay, I got it now. Sorry. It's okay, I got it now. Cash sales.
So 211. At this point now, I have to consider my 211. This is workings, please. This is workings. Just take notes. I'm just trying to show something. 214. So our sales, overall sales in 2011 is what? 3,600,000, right? Multiplied by 12. You have what?
43,200,000.
43,200,000. In 2012, the overall sales is what? 1,200,000.
50,400,000.
Multiplied by 12. You have what?
400.
400. In 2030, the overall sales is what? 1,800,000 multiplied by what? 12. We have it as what?
57,600.
In 2014, monthly sales is what? Multiplied by 12 is what?
86,400.
So the cash element of these cells, cash sales is what? 40%, right?
Yes.
Yes, sir.
So 40% of 43,200 will give you what?
17,280,000.
Now the credit element, credit sales will be 60%. So 60%.
25,920.
25,920.
25,920. 25,920. So as at 211, how much are we going to will be outstanding in terms of credit sales?
25,920.
Is that?
25,920.
No. You know, this is the overall for the year, right?
Yes, sir.
Yeah.
It's 2 million. That of December is 2,160,000.
Yes, very good.
That's 1 month.
Yes,
for 1
just for
month.
1 month. You know that of
1
January was due in. You understand?
Yes.
Yes, sir.
That would be received.
So, outstanding. Let me just put it as outstanding. Outstanding receivable that will be due in 212. How do you get that? You can just divide everything here, 25,920 by 12. You get the 1 month value. You have it as 2,160,000. You get?
Yes.
So when you are now getting your cash inflow for 212, you know this will be due in January. 212. It will form part of your cash, part of your inflow for that period. So let's take note of that. So for 212 now, your cash sales will be what?
2160.
2160. Your credit element will be what?
30,240.
Now, what will now be your outstanding receivable here? That will be due in the next year.
2520.
520. Hope you are getting it, everybody.
Wait, 212 outstanding now be 0.6 times 4,200.
Madam Onyinye, hope you are getting it.
Yes, I'm getting it. This is why I got stuck. I'm getting it.
Okay. Hi, Bishop. Hope you are here, sir.
I'm here.
Madam Chinenye.
I'm getting it, sir.
If I didn't call your name and you are not getting it, you can raise up your hand. Mr. Nee. Stani, hope you are getting it. He's not here. Mr. Nanju.
We have to together, sir.
All right, fine. So now, for 212, for 213, your cash sales will be what? 40% of 57,600 will give you what?
23,040.
And your credit sales will be what?
34,560.
So the outstanding will be what?
2,880.
Moving to 214, the cash sales will be what? 40% of 86,400,000.
34,560,000.
And the credit elements?
51,840,000.
And the outstanding?
4,320,000.
$1,320,000. $1,320,000. So now, let's take it further. It means that this my credit sales. How much will be the total inflow for 211 if this will be outstanding? My total inflow, what I will get as cash from my credit sales within 211 will be what?
17 to
I
18.
think we will less the 1 month from the 12 month.
Okay, very good. So cash flow from debtors. Cash flow from debtors. You know, this is the overall credit sales, isn't it?
Yes.
Yes, sir.
This value will be outstanding because it's occurred in December. So it will be due in what? In January 2012. So it means that when we less this value from this value, we will get the total cash from our debtors that is due in 2011. And that will give you what? 23 what?
760.
760.
23,760. For 212, your total cash from
Excuse me,
debtors.
sir. Excuse me, sir.
Sir, come
Yes.
back. Oh.
That's 2,160,000. Is it not the total cash from the debtors?
No. Mvan.
No, but 12,920,000 is credit sales.
Yes.
Yeah, for the year.
Very well, sir.
Now, 2,160,000 is credit sale for just particular month, December, that will go for 2012 January.
Very well, sir. So how much will you get in cash, sir? In cash.
But what about the 40% cash sales?
Cash is 17,280,000 now.
Okay, let me change the language. Out of the credit sales now, the total credit sales, how much will you recover back in cash within that year?
Okay.
How much will you recover back? You know, the policy is 60% of the credit sales will be due for collection in the next month. It means that in the month of February, the credit sales in January was due for collection in February, and it forms part of your cash, isn't it?
Yes.
So now, overall for the year, if your total credit sales is 25,920, now, how
remove it for that remaining? Yeah, you remove it for that 1 month, December, that you receive January. Okay.
So your cash flow from your debtors, those people that are not paying in cash, overall for the year will be what? These. Removing this value of 1 month.
It's a long process.
Yes, ma'am.
I have a question now. Because
Yes.
what about the I tried to go and read the question again. What about the card sales of 40%? Are we not
Yes,
recognizing that inflow?
we are recognizing it. Well, this is workings. Don't worry. When we go back to our sheet, this is our sheet, cash inflow. This is it. I'm just breaking it down now. Do you understand?
Oh,
When
okay.
we go back to our main cash flow, we'll bring all those elements into our table. Yes, I'm
Okay.
just trying to break it down so that when we are bringing it in, everybody will be fine. Do you get?
Yeah, I do. Thank you, sir.
Yes. So I'm just showing the workings. So now for 212, what will happen here?
27.
720.
For 212, 27, 720. And for 213, it will be what?
31,680.
21, 680. And for 214, it will be what?
47.
20.
Okay, 47,
520.
520. Okay.
So, Top, I have a question now.
Yes.
You know, the outstanding will be received in January 2012.
Yes.
Are we not supposed to add it as cash from debtors?
Two
We
one
want to,
six.
we want to bring them, we want to show them separately on the line, on a separate line.
Yes, very well.
Okay.
This is it. This is it. It will now be what? Add receivables.
Okay.
Add receivable. You know, we are only considering the question wants us to solve for 212 and 213, 214, right?
Yes.
So
Yes, sir.
what will be your receivable in 212?
It will be
2,160,000.
29.
2,160,000.
160 plus 27, 720.
Yes, this value here will be due to be received in what?
2012 January.
Which will be 2160. So this value here will be due to be received
2013 January.
520. This value here will be due when?
January 2014.
So 2880. So now your total receivable will be what?
29.
29,880 for 2012.
Total receivable will be 29,880. That is this, right? The addition of all this for each line. So 27,720 plus 2,160. This will be what? 29 what?
880,000.
880. And for this, it will be what?
34,400.
And for this, it will be what?
5,400.
5,400. Wow.
So you've been able to break this down. Now let's now go. This is workings. Let's now go to our table now. Let's go to our table. So your sales, your cash inflow, you have sales. Sales. What is your sales value for 212? Cash now, cash.
2160.
Is what?
20 million.
2160.
Fine. 2160. What other cash inflow do you have in 212?
Receivable.
Which is what?
29,880.
Receivable. So 29,880. So your total cash inflow
50 million.
this will be what? 50 what?
50 million, 40.
50,500,400.
Is it 50 million and 40,000?
Yes, sir.
And for this, we have it as what? 213. Your sales is what? Cash sales. 213.
23,440,000.
23,040.
23,040.
And for this, your receivable is what?
34,200.
34,200.
57.
Yes, 34,200. So your total cash inflow will be what?
57,240.
57,240. And then for 214, your sales, cash sales is what?
34,560.
34,560.
34,560. And your receivable will be what?
50,440.
50,100.
Oh boy.
So your total cash flow
85
million 960.
84,960. Who is not clear at this point?
Is the other
This is
one 5440 for receivable?
5,400.
Okay.
So who is not clear at this point? This is revision, so I'll move. I will always ask who is not clear. The point is, after this class, if you want to know, you know it. You have to solve it again on your own.
Yeah.
But I will do it this night too. No, I'm amazed because I've solved this thing. You've done this thing with us before.
Yes, I know the power in this question. That is why I'm bringing it up again.
Yeah, you've done it before. I wonder.
Because if you can analyze this question on your own, personally on your own, you will have serious confidence going to the hub.
Just wait tonight.
So that is why I'm trying to bring it up so that you look at it again on your own, interpret it on your own, then you'll be fine. So the attitude you put in your personal studies is what will help you when you go to the hub. Yes. Once you can interpret question on your own, at home now, you can interpret question. When you go to the hall, you will use that approach to interpret question. You will not come back or go out of the hall like that. You must definitely put down something. You must definitely write well. So that attitude is very important. So let's take it further. Let's move to our cash outflow. Let's move to our cash outflow. Cash outflow. Now, what will make up our cash outflow?
Purchases.
Purchases. What is the policy? What is the policy of this organization in relation to purchases?
The policy of purchases is to agree with
the following month.
Is to pay for all supplies
in the month following.
in the month following. Okay, in the month following. All right. Let's show workings for these two. Let's show workings for this to make it clear. Tables. 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 We'll pick it from 211 likewise, from 212, from 213, and from what? 214. Now, your overall payables for the year, or purchases for the year rather, for 211 will be what? Overall purchase.
28,800,000.
800.
Purchases. Because it is from purchases you will know what is happening. For 212 is what?
3,600.
For 213.
38,400.
Yeah.
That's 8,400.
Now, looking at this, somebody will help me out now. That the policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following. The month following. What will now happen?
Then for the December.
Yes.
For December will be paid in January.
Okay, fine. So what will happen in 211?
For the 1 month will be added in 212.
Yeah, so what will be the outstanding purchase in 211? It means out of the whole 12 months, 1 month will not be paid till next year. Isn't it? Next year.
Yes.
So what will be the outstanding purchase as at 211?
2.4.
Let's work it on.
It's true now. They're only giving us one month in the question.
Yeah, see it.
3.
For 211, 2.4. So 2.4, it means for 1 month will be due the next year.
Okay.
So 2.4.
Okay.
So how much will you get in cash? Based on how much will you pay in cash?
28,400.
2 million. I mean,
26,400.
26,400.
26,400.
Because it's the cash element we are looking for. 26,400. So in 212, what will happen here?
In 212, that is 2,000.
Outstanding 2.8.
2.8.
Outstanding.
Then how much are you paying overall in cash?
30,800.
And for 213, monthly purchase 3.2. Less, that's the one that will be due the next.
35,200.
Anytime you see it up, Abba, bring it down.
35,200. Then for 214,
put it up, and
it will what?
Whatever he's doing, you are there.
4,800.
So we have it as this is 4,800,000. Then payment to suppliers in cash overall 52,800. What will now happen now?
So we have
800.
So, you know, this value outstanding purchase in 211 will be paid in when? We paid 212, right?
212. Yeah.
Yes, sir.
Outstanding due. So it means it will form a cash outflow in 212, which will be 2.4. So the overall payables in cash will be what?
33,200. 33,200.
33,200.
So the addition of these two values, this will give us 33,200. For 213, something will happen here. Outstanding due
2.8.
We have 2.8. The total will be what?
38 million.
And in 214, it will be what?
3,200. 3.2.
56.
Which are 56.
So you now go back to your table. You go back to your table. Your payables for 212 will be what?
33,200.
33,200. How did we get that? This is it.
From our workings.
Now, for 213, it will be what?
38 million.
And for 214, it will be what?
56
million.
Now, from the question, do we have other cash issues, transactions that we paid instantly by cash?
Yes.
Cash?
Salary.
We have cash expenses, right? Monthly cash. Okay, or salaries. 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 The value is what for 212? For 212, 430 by 12.
12. 5,160.
5 million.
160.
And for 213?
5,160,000.
Amount 5,560,000.
And for 214?
5,760.
The next is
cash.
Can have our rent.
Rent is fixed 1.2.
It's fixed, and that is why we're having it as 1.2 up through. Then what else again?
Cash expenses.
Cash expenses. And we have it for 212.
28. 2,880,000.
2,880,000. And for this to be what? 3,360,000. And for this it will be what?
4,320,000.
320.
Any other thing?
No.
Motor vehicle.
Our motor vehicle, we gave out cash to get it. As at which year?
2013.
2013.
It's 5 million. So the total cash outflow will be what? Total cash outflow will give us what?
42 million. 40,000.
42,040,000.
42 million 440.
For 213. For 240,67.
No. Okay. 52 720. 38 516. 2 7 7
So the difference between your cash inflow and cash outflow will give you what?
Net cash.
For 2012, 7,600. 7,600,000.
That is 50,040,000 minus 42,440. You have 7,600,000. And for 213,
4,520,000.
1,520,000. And for 214, you have it as what?
17,680.
680. So the next thing is what? Do we have opening value of cash?
Yes, sir.
Yes.
4 million.
Opening balance.
Opening value of cash. It's look at it. The cash balance as at 31st December 2011 was what? 4 million. So this will be the opening balance in which year?
2012.
Fine. So you now have opening cash balance. Opening cash balance for 212 is what? 4 million. So what will now be the closing cash balance?
11,600.
Closing cash balance. It will be this net cash flow 7.6 plus what? 4 million. Give you the closing value, which is 11,600. So what will be the opening in 213?
11,600.
The closing will be the opening in the next year. Then the closing balance for 213 will be what?
16,120.
120.
The opening in 214 will be what? The closing of 213.
120.
Yes.
And that will be what?
16,120.
Is 33.
3,800.
3,800 is the closing balance.
300.
So this is what the question wants you to do for the B part. Prepare cash flow statement for 213, 212, 213, 214. Any question?
This is 10 marks.
So once you can do this, what is the formula to calculate current ratio?
Current asset.
Current liability.
Current asset divided by current liability. Now, if you move further, the question is asking you to determine what?
Gearing ratio.
No, for C.
Liquidity ratio.
Comment on the liquidity ratio.
Or current ratio.
For 214, right?
Yes.
Yes.
For 214. To compute liquidity ratio, you have to look at your current ratio. That is, how much assets do you have to cover up for your liabilities? How many times can your assets, your current asset, your most liquid asset, cover up for your current liability? Yes, within what rates? So looking at 214, what are the elements of current assets? What are the
Closing stock.
elements of current assets?
Closing
Fine. Closing
Inventory.
stock,
Inventory.
receivable, yes, cash balance. Your cash balance as at
Okay.
214, your closing cash balance, that 33,800, 33,800. Your receivable, closing receivable. Yes, as at that period, 214, your closing inventory as at that period. So you go and pick all those elements. You go and pick all those elements. Now the question is, what would be your current liability as at 214?
It will be debt and equity.
Not yet. Your current liability.
Payable.
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 Fine. Payable as at 214. So your current asset divided by your current liability will give you what? Your current ratio. For 214, they are specific just for 214. Go and pick this element and add together, divide, you get your current ratio. Your current ratio. Now, what is quick ratio or acid test ratio? What is the formula for it?
Current asset minus inventory over current liability.
Current liability.
Yes. We must know that likewise. Know that likewise. So the next is what? That computes gearing ratio. What is gearing?
11.
Debt to equity.
Debt to what?
Equity.
Gearing is the proportion of debt in the overall capital. Yes. So if you have to compute gearing ratio, it will be your debt capital divided by total capital. Your debt capital divided by what? Total capital. From the introductory part of the question, they gave us proportion of debt and what? And equity. Proportion of what? Debt and equity. Now, 30% of 15 million will give you what?
10,500,000. I mean,
yes,
4.5.
4,500,000. Fine. So for you to get your gearing ratio, your debt element in 15 million is what? 4.5. Your total capital is what? 15 million.
10 million.
So 4.5 divided by 15 million will give you your gearing ratio. That is your debt capital in relation to your total capital. In financial management, there are various formulas. Even in performance management or in financial reporting, there are various formulas for gearing, depending on the elements given to you in your statement of financial position. In your statement of financial position. So, in simple terms, it is your debt capital divided by what? Your total capital. Because in some question they can give you things like debentures and the rest of it, but overall, just know that your debt capital divided by your total capital will give you your gearing ratio. Give you your gearing ratio. So I want us to, any question on this? I want us to solve the other question. I'll be taking your time but it's for our own good. So where is this other question? The question on Zithromas. How many of you have attempted it? I don't have it in this slide. The question on Zithromas. If you have it, can you read out, please, as I forward it to my system?
Which diet?
Which diet is that question again? I didn't open my Pathfinder one. Somebody should do a quick search.
I think I checked it in the platform. Is it not Mega Laboratories?
It's Mega Laboratory.
You sent it now. It's one of
It's
the
on the
questions.
platform.
Okay, May 2022.
Can somebody read it out?
Mega Laboratories PLC is a successful manufacturing company in the pharmaceutical industry. The company manufactures a number of household drugs. Since the advent of the COVID-19 pandemic, each product has been in high demand. One of its newest products is known as vaccine D-COVID. In order to manufacture the product, a new raw material, Zithromax, is used. Budgets are to be prepared for the quarter ending 30th June 2021, and the following information is available for this purpose. As 31st March 2021, various balances were as follows. Then, 2. Extracts from the standard cost cards vaccine B-COVID are as follows. 3. Suppliers of Zithromax give 2 months credit to the company. Suppliers of Zithromax give 2 months credit to the company, whereas customers take 1 month credit. Self-certification for the quarter ending 30th June 2021 are as follows. And 5 says, assume that sales of COVID vaccine COVID and purchases of Zithromax will be evenly spread over the 3 months to 30th June 2021. Depreciation relating to plant and machinery is 55,000 for the quarter ending 30th June 2021. 7. Other expenses are paid immediately in cash and are estimated to be 200,000 for the quarter ending 30th of June 2021. The anticipated inventory levels at 30th June 2021 are as follows. 9. Assume there is no work in progress and the stocks of vaccine B-COVID and Zithromax are valued at standard direct cost. C2 above. Required for the quarter ending 30th June 2021, prepare a cash budget. Amounts for each separate month are not required. 8 marks. B. Income statement budget. Clearly state any assumption to have made. 5 marks. C. Briefly state the benefits of a cash budget to Mega Laboratories PLC. 3 marks. B. Sales are often considered to be a principal budget factor of an organization. Required. Explain the meaning of a principal budget factor. and assuming that sales, assuming that it is sales, then explain how sales may be forecast, making appropriate reference to the use of statistical techniques and the use of computers. 4 marks, total 20 marks.
All right. Thank you very much for that.
That's all, sir.
All right. Thank you, ma'am. So looking at this question, you must also calm down to study it very well. Yes. There's a question on mega laboratory, and that budgets are to be prepared. Budgets are to be prepared. Are to be prepared for the quarter ending 30th June 2021. You must understand what that is referring to. I once asked that how many months make a quarter?
3 months.
3 months. So if you are to prepare a budget for the quarter ending 30th June, how many months are you looking at? Which month and which month are you looking at?
From April, May, June.
Fine. April, May, June 2021. Now, if you look at the question, that at 31st March 2021, this at 31st March 2021 is telling you that what? What is it telling you? That as at the end of the first quarter, isn't it?
Yes, sir.
As at the end of the first quarter, these are the closing balance. Receivables, 500,700. Creditors, suppliers of Zitromas, 153. Inventory of vaccine the COVID. This is the closing stock now of vaccine the COVID, 20,300, which will be the opening stock in the new quarter, isn't it? It will be the opening stock in the new quarter. What they want you to do now is a production budget. You prepare production budget. You know your sales budget. From your sales budget, you do your production budget. From your production budget, you do your material usage budget. From your material usage budget, you move to what? Your material purchase budget. Since from your material purchase budget, then you can now prepare your labor cost budget, and from there you attach monetary value to each of all these, then you come up with your cash budget. So the closing stock for the first quarter of inventory Zitromas is 200,000 kg. Now you have two components of materials. You have finished and raw material. The raw material is Zitromas, and the finished product is what? Vaccine the COVID. Vaccine the COVID. So now you have standard elements, standard cost card that extract from the standard cost card for vaccine the COVID, which is the closing or the finished product. You need how many units of Zitromas to produce one vaccine the COVID? This is it, direct material, Zitromas, 10 kg. You need 10 kg to produce what? 1 unit of vaccine the COVID. How much are you spending to get 10 kg? 5 naira.
5 naira.
Per kg. Per kg. So overall, when you get 10 kg and 1 kg is 5 naira, how much are you spending? 50 naira for 10 kg. Isn't it 5 times 10 kg, 50 naira? Direct labor, 2 hours at 6 naira per hour. It means you need 2 hours to produce one vaccine the COVID. How much are you paying per hour? 6 naira. You use 2 hours, 6 multiplied by 2 is 12. Suppliers of Zitromas give 2 months credit. See that English? It means if you should get raw materials from your supplier, you will not pay immediately. You will pay after what? 2 months.
2 months.
After 2 months. Whereas customers take 1 month credit. It means those you sell to, you are giving them 1 month credits, 1 month grace for them to pay you back. You see the English there. Now, sales expectation for the quarter ending 30th June are as follows. This is it. Sales expectation. It means your projected sales in units. Your budget in terms of sales is what? 25,000 units of vaccine the COVID. And the selling price is what? For 1 unit, 95 naira. So if you are asked, what is the sales budget? What will you tell me?
25 multiplied by 95.
Very good. The sales budget in units is 25,000 units. In terms of value, it will be 25 multiplied by what? 95 naira. So you have your overall sales budget will now be 25 multiplied by 95. You have a value. Now, if you are expected to produce 25,000 units, do you have any stock in existence for vaccine the COVID? Do you have any stock in existence?
Yes.
Sir.
And what is the value of that stock, the unit of that stock?
20,300.
300.
2,300. Okay, fine. 2,300. 2,300. Okay, let's keep moving now. Let's proceed. Okay, fine. So, okay, now assume that sales of vaccine the COVID and purchase of Zithromax will be evenly spread. See the English. Evenly what? Spread. It means they are equally spread within the 3 months. Equal values within the 3 months. That assume that sales of vaccine the COVID and purchases of Zithromax will be evenly spread over the 3 months to 30th June 2021. Depreciation relating to plant and machinery is what? 55,000 for the quarter ending. See the English. For the quarter ending 30th June 2021. Quarter ending 30th June 2021. That other expenses are paid immediately in cash and are estimated to be 200,000 naira for the quarter ending 30th June 2021. Now, that anticipated inventory levels at 30th June 2021 as follows. Who can interpret this statement? What is the meaning of this?
Opening inventory.
Closing inventory.
Yes. Yeah, closing. You see the opening here as at 31st March 2021, the end of the first quarter. Those values will be the opening. Now, that's the anticipated inventory level as at 30th June 2021 for inventory of vaccine, the COVID will be what? 15,000 units. For Zithromax will be what?
5,500 kg.
It means if you are preparing your production budget, your closing inventory will be what? For vaccine the COVID?
15,000 units.
15,000 units. And also, if you are preparing for material purchase budget, that is material purchase. If you are preparing for material purchase budget, because you will need how many quantity of material? We'll get to see that. It is the quantity of material you will need, of Zithromax you will need, that will determine how much you will purchase. You have existing Zithromax.
Yes.
If you have existing
200,000.
yes, fine. You have existing Zithromax. What is your projected closing for Zithromax?
150,500.
155. Good. So when you do all this, you will have your material purchase budget. Then you can now prepare your sales budget and the rest. Let's show the workings. Let's show our workings. But let's see what the question wants us to do. Let's see what the question wants us to do again. That's required for quarter ending 30th June 2021. Prepare a cash budget. Amounts for each separate month are not required. Fine. Prepare income statement budget. Clearly state any assumptions made, and so on and so forth. My major concern is on the A part. That is where the work is. Yes. So let's see what we can come up with in terms of the cash budget. For you to prepare the cash budget, you must prepare various stages of budget: sales budget, production budget, material usage budget, material purchase budget. Then you must look at your sales, you must look at your purchases, and your labor costs. Then you come up with your cash budget after doing all this. So let's see the workings. Solution. Mega laboratory. Mega laboratory cash budget for the quarter ending 30th June 2021. So you must give your title. So the first thing, we need to determine our sales budget. You see, the question did not tell you directly, but looking at the flow of the statements, you can infer from the question that these are things you need to do. But the question will not just tell you, go and do this. So you must be able to analyze the question clearly. So sales budget. Your sales budget, what do you need from the question? How many units have they projected? It's clearly stated in the question.
25,000.
It's sales expectation, our projection, our expectation, our forecast is this. So that is the budget. So they will not come and tell you clearly that our expected budget is this. So you must understand English language. Somebody will say I'm emphasizing English language. It's very important. So your sales in units is what? 25,000. The selling price given in the question is what?
95. 95 naira.
95. So overall, when you multiply 95 by 25, what will be the value of sales budget?
2,375,000.
2,375,000. I think it's good I present this in a table for that. Let me use table for all this. So we have our sales budget. Sales budget. We have the unit value. to be what? 25,000. You have the selling price to be
95 now.
95. Then sales value, total sales, will give us what? 2,375
thousand.
Now, from this your sales budget, you can know your production budget. It means in the market, you are projecting that you should be able to sell what? 25,000 units. If you project that you are to sell 25,000 units of vaccine the COVID, do you have any existing stock of vaccine the COVID from the past quarter? If yes, let's now look at our production budget. How will our production budget look like? Let's see production budget, because your principal budget factor is your sales budget. Once you know the quantity you are to produce, then you now make a plan for production. So production budget. Now, what will come here as the first issue in relation to your production budget, your sales will determine that. Sales in units. Sales in units. How much do you have to sell?
25,000.
So do you have any existing stock?
Yes, 200.
Yes.
What is the value? The value of the existing stock.
2,300.
Fine, 2,300. And the closing of vaccine the COVID is expected to be what?
150.
Please, I'm a little also.
15,000.
15,000.
Yes, it's not clear.
I'm not there.
Yes, at what point, please?
400 now.
400?
So,
Sorry, I didn't get you.
okay, from after the sales value that we got 2,375,000 that we are looking for the other inventory.
Yes, the sales value is this. From your sales budget is 25,000 units.
Yes, sir.
This your sales budget will determine what you are to produce.
Okay.
So what you are to produce is a function of, do you have any existing finished goods likewise? And what is your projected closing stock? So your sales budget will determine your production budget. We have 25,000 units to sell. Now, out of these 25,000 units, are we still going to produce all? Is a question. There's a question mark there. Okay. How are we going to answer that question? Are we supposed to produce all? The question is, do we have any existing inventory of this same stock in our warehouse? If yes, what is the value? What is the value? If we have opening inventory, the opening inventory is what? Is 2,300. 20 what? 2,300. Now, are you still going to produce what you have? That is the question. Are you going to produce what you have? The answer is no.
No, it's finished.
You are not producing what you have and that will reduce the quantity you have to produce. It means you are not going to produce the whole 25,000 units again because you have already existing stock to the tune of what? 2,300. So the concept is what? Less what? Less what?
Okay. Opening inventory.
Less opening inventory.
Inventory.
And the opening inventory is what?
2300.
2300. Okay, I get it now.
2300. Expected to have certain level of closing stock in your warehouse that you shouldn't be out of stock totally. Yes. So based on the question, you are given a projection of what? 15,000.
Yeah.
15,000 units. This is it. 15,000 units. That anticipated inventory level at started June 2021 should be what? For vaccine the COVID now, which is the finished goods, should be 15,000 units.
Yes.
What will happen in relation to that? What will happen?
Or add the closing, the
Add,
anticipated closing inventory.
yes, add closing inventory. Add closing what? Inventory. So
Okay.
value of closing inventory is what?
15,000.
15,000. So your production budget will now be what?
19,700.
700.
So production budget will now be what? 19,700. It means this is what you are to produce. This is what you are to produce. So this is what you are to make plan for in terms of production. This is what you are to make plan for in terms of what? Production. Now, if this is what you are to make plan for in terms of production, which material do you need to produce these goods?
Zipromas.
Zithromas.
How much are they selling Zithromas? Or what is the quantity of Zithromas you need? That is the question.
They're
Let's
selling
come.
5 naira. 10 kg at 5 naira.
Okay, it means to produce 1 unit of vaccine the COVID.
We need 10 kg.
Are we getting it at all? All right. Maybe some people are eating. For you to produce 19,700, what is the quantity of the raw material, which is Zithromas, that you need?
10 kg.
10 kg. So 10 kg multiplied by 19,700 will give you the overall quantity, the material required to be used. So we have it as this. We have it as this. So let me still use this region. Let me use this region. Material usage budgets. Material usage budgets.
Stay here, you just get
now concentrate, no be read it.
Material usage budgets. Material usage budgets. Now, our production in units is what? Our production
19,700.
19,700. Now, to produce 19,700, how many units do we need of Zithromas do we need?
10 units.
Material
10 kg.
Material used in kg now. 10 kg. So overall, how many kg?
197 kg.
Yes. Total material usage. So 197 thousand kg. Now, if you are to use these 197,000 zithromas, the question now is, do you have any existing zithromas?
Yes.
Yes.
So this will now lead to material purchase budget. Usage, from usage, we move towards purchase.
Material purchase.
Material purchase. Material purchase budget. So we are expected to make use of what? Material usage. Make use of what? 197,000 kg. Do we have any existing? You said yes. The existing material, which will act as the opening stock, is what? See it, inventory of zithromas, 200,000.
200 kg.
And the closing is what? 150,
500.
So what will now happen at this point? Less what?
Opening.
Less opening inventory. The value is what?
200 kg.
200 kg. Then add
Closing inventory.
Add closing inventory.
150, 500.
Add closing inventory. It's 150, 500. So based on this, how many zithromas do you need to buy or purchase? Material purchase in what? In units.
147, 500.
147, 500. In terms of money value, how much do you buy one?
5
5
naira.
So material price per kg, 5 naira. So overall, how much will you incur?
737, 500.
Okay. So we have 737, 500. That is material purchase in naira or in value. So now, having ascertained this, let's take it further. The question is telling us something. The question says that what? That let's see. The question is saying that assume, okay, no work in progress, and this, okay. The question is saying that yes, assume that sales of vaccine the COVID and purchase of zithromas will be what? Evenly spread over 3 months. Now, our sales value is what? Our sales value is what?
2,375,000.
Fine. They are now telling us that this value will be what? Evenly spread. So what will happen here?
We'll divide by 3.
Divide it into 3.
We'll divide this by 3. Good. Good. Do we have any brought forward related to sales?
Yes.
And what is the value?
500, 700.
That is receivables. Receivables.
Yes.
Fine, good. Still also, they said purchases. Purchases should be evenly what? Spread. Like,
Spread.
how much are we spending on purchases of material?
737,500.
It means you also divide this by what?
3.
3. The question is also telling you something. That's what?
Creditors, suppliers of Zitronmax.
That's, where is it? Yes, suppliers of Zitronmax give 2 months credit. Give 2 months credit to the company. It means once you buy, you are not paying as at that month, you are paying in the next 2 months. Whereas customers take 1 month credit. It means when you sell, you are not getting your money instantly till after 1 month.
1 month.
So let's take it further now. Let's break everything down. Let's break it down. Sales. Sales. That sales will be evenly spread. So the value of our sales is 237. 237. When it is evenly spread, we are looking at 3 months, a quarter. Divide by 3. You have what?
237.
791.
791.
666.
So for 3 months, let me put 3 months here. 3 months. So the months that make up that quarter: April,
May, June.
May, then what? June.
June.
It means the sales for each month, when it is evenly spread, it will be what? 791.
666.7.
This one will be 791. 666.7. This one will be 791. 666.7. Let me stop at this point. Who is not getting what we are doing?
I'm lost though.
Madam Chiko delay at what point?
The sales, the figure, how do we get it?
Which of the figure?
The sales for it. Yes. Okay.
I said maybe you quickly went to take Oha.
Yeah. It's well.
So see it, ma. See it.
Yes, I've seen it.
I can see somebody saying, "We is also not getting what we are doing." You have to get it. You have to get it. Who is not getting it? Let me see the person again. Raise up your hand, though. The point is you have to pass. So who is not getting it? Raise up your hand. Madam Onyinye, where is the problem? Tell me now. Yes, can you speak? Or you want to send a message? Yes. You have to tell me where you are not clear so that I will just go there and explain where you are not clear so that you'll be fine.
Hello, sir.
Yes, I'm with
I
you.
missed, yes, I missed out the current slide you are showing, so that was why it wasn't clear. But I've seen it, so I'm following now.
All right, fine.
Thank you.
So now the cells is evenly spread. That is the English, equally. If you have 4 months, you divide these cells by 4. If you have 5 months, you divide every month you have same value. But note the fact that they are evenly spread. April, you get 79166.7. May, the question is still telling you something. That watch that suppliers of Zitromas give 2 months credit to the company, and you, which is Mega Laboratory, you are giving just 1 month credit to your customers. So if you make sales in April, when are you going to get your money?
May.
No, it's not May, it's June.
No, it's May. It's 1 month. It's when they buy
Okay.
that they get 2 months.
Yes, it's 1 month.
Let me just put sales due. So it means April sales will be recovered in what?
May.
May. Then May sales will be due when?
June.
In June.
Then March sales is in April.
We've closed the March sales. Is the receivables brought forward? That is why I asked the question. Do we have anything related to sales? Isn't it? I asked that question. These receivables, fine. That March sales will be receivables in what?
In April.
In April. So you have it. You have it as receivables. Receivables. And how much is it?
500, 700.
So you have it 500, 700. I'm not supposed to show this first part. I'm showing it for explanatory purpose because somebody might get confused after some time. I don't need it. This is what we need. This is what we need. So now the question is, what will be your total collection?
700. 700, not 500.
Okay, 500, 700. What will be your total collection for the period, for that quarter? This will be 500, 700. This will be what? 791. 666.7. This will be 791. 666.7. So the total overall will give you what? Total will give you what here?
$2,084,033.4.
So this will be for the total collection in terms of what? Sales. The cash in terms of sales. Because the question is telling us we should prepare cash budget, the cash for that period, that quarter. Now, moving to purchases. Our purchases, the purchase value is what?
500.
The question is also telling you that when you make purchase, or before then, the question is telling you that assume that sales of vaccine the COVID and purchases of Zitromas will be what? Spread. It means that this value of 737,500 will be divided by what?
3.
Still further, the question is still telling you that what? that the suppliers of Zitromas, when you buy these Zitromas, you will pay afterwards 2 months.
2 months.
Pay you 2 months credit. So now let's now bring it down here. Let's see. Purchases. 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 The value of purchase is what? 737,500. Divide by what? 3 months. The result will be what?
245,833.3.
So now that's evenly spread. For explanation purpose, I will still show it April, May, June. Purchases. April to be 245,833. 245,833. 245,833. Now, when you make purchase in April, when are you going to pay?
June.
So it means you will pay in June 245,833. Do you have any opening issue related to purchases? Let's go back there.
Yeah, creditors.
Fine, creditors, suppliers of Zitromas. It means you have payables due as at the beginning of the quarter. So you have it. These creditors now. Creditors. It will be due when? As at the beginning here. 153. Okay, May. Okay. No, you know it's opening already. It's closing as at that time. So they just made it clear. Closing. So it will come to the first month. They will take it to May. Your result will still be very, very okay. But for principal purpose. So now, when you have it in this order, the total will be what? Take notes. You know, I don't need this part. Just for explanation purpose, I decided to put it. So your total, in terms of cash, this will be 153. This will be what? 245.
3.
So overall, when you add 153 plus 255,833, you have what?
39.
833.
39.
833.
833.
153 was it given creditors? Okay. That creditors 153,000 was it given in the question? Or we worked it out?
Yes, from the beginning.
Okay, sorry. Yeah, sorry, I've seen it. Yeah.
So now there is something you still need to determine. This your production of 19,700. Where is it? How are you going to produce it? Are you going to use labor? See the question. Direct labor, 2 hours at 6 naira per hour.
Per hour.
It means for you to produce 1 unit of vaccine the COVID, you need
2 hours.
You need 2 hours. You need 2 hours, and using 2 hours, you are paying how much per hour?
6 naira.
6 naira. If you want, you can just say, because you are incurring 12 naira overall, 12 multiplied by 19700, you get your total production, your labor rate, your labor cost. But let's show it in a bit. Let's show it this way. Okay. Let me come back here. Let me say labor cost budget. Labor cost budget. Now, your production will determine the cost. Production is what? 19. What?
700.
Labor hours per unit.
Labor hours per unit.
Labor hours per unit is what?
Labor hours per unit is what? 6 labor hours.
I can see your Madam Rose. Your mic is making it echo. That's why I have to observe with. Can you speak now? Let's hear. Labor hours per unit is 2 hours, right? So your total production hours will be what? Total production hours will be 2 multiplied by what? 19,700.
39,400.
39,400. So how much are you paying overall? Rate per hour. How much are you paying? 6. So the labor cost overall will be what? You know, you can just use 12, but I just want to show you step by step. 236,400. So with all this, can you prepare your cash budget? You know, in your cash budget, you need inflow and outflow, right? So based on what you saw, what is your inflow? What is your inflow? Yeah, your sales. What is the value of that sales? Or collection from customers. What is the value? Let's just put it as sales now. Collection from customer. What is the value?
Customers.
Yes, what is that value?
22
million.
2,084,000.
Fine, fine. So now, cash budgets. Cash budgets. Cash budgets. So we have it cash inflow. Cash inflow. We have it as collection from customers. The value is what? Is 2,084,033. Any other thing? Any other cash inflow? So total cash inflow, we have it as 2,084,033. So do we have cash outflow?
Yes.
Cash outflow. What are the elements of cash outflow? This value here, payment to suppliers.
To suppliers.
Payment to suppliers. Payment to suppliers. The value is what? 398,833. And which other thing constitutes outflow? Labor cost. Say it. Labor costs. We are paying labor costs. Do you know this issue of material? It has been treated here, right? Under purchases, isn't it?
It is.
So, because somebody might say, why are we not bringing other factors that has to do with the issue of sales have been treated under this part here? Yes. So now, labor, there was no any story about labor. Maybe we are paying after 2 months. You know, workers will not want you to hold them. You pay them as they work. So it is instantly you pay. Nothing like go and come tomorrow. Labor costs. The value of labor cost as computed is what? 236 400. 400. Any other expense? Let's go to the question again. Other expenses are paid immediately in cash and are estimated to be what? 200,000 for the quarter. So the other expense, we have it as what? Other expense. Other expenses, the value is what? 100,000. So from this, our total cash outflow will now be what? Total cash outflow will now be what?
$835,233.
Okay, 835,233. It's 835,233. So what will be our net cash flow? Our net cash flow will be what?
1,248,800.
Okay, net cash flow. Net cash flow will be what? Your inflow minus what?
Outflow.
So you have it as what? 14,124,8800. Any other thing? Do we have opening cash balance?
Yes.
Yes.
Opening cash balance. What is it? Let's go and look for it. Look at it. These are the opening issues. Do you have any issue of opening here? Cash.
No.
No.
Fine. So it is nil. It is nil. So with this, can we have closing? The closing will be what? Closing cash balance. The closing will be what?
1,248,800.
Still 1,248,800. So this is your cash closing cash balance, and this is your cash budget for the quarter ending June 2021. Any story about this?
No story.
All right. Please understand this. It's very, at least it is mind-blowing because we are solving it. When you go back on your own, try and understand it the way we discuss it here. Then you discover that you'll be very fine. So the next is that we are to prepare what? I will not do that. You teach me how to do that. That we are to prepare income statement for the quarter. Income statement for the quarter. That one is very much easy. I don't like treating that one. That's income statement budget. Clearly state any assumptions. So the income statement budget, how is it going to look like? Yes, I need a guide. We're talking about income. What are you looking out for? Yes.
Sales.
Fine, sales. The other one we talk about profitability. We started with sales too. Income statement. Budget for the quarter ending 30th June. 30th June 2021. That's it, June 2021. So the first thing you said is sales. Now, when you deal with your sales, the value of sales would now be what? This is normal sales overall. We are not looking at cash element now. The value of sales will be what? 2,375,000. Yeah. 2,375,000. What next? What next? What can we do? What do you think we can do here?
Receivables.
No.
Add opening.
Let's purchases.
Okay, we have our opening, right? We have our opening stock, right?
Yes.
Yes.
Opening stock. People are tired. Sorry. The value of opening stock is what? The value of opening stock is what? Is in the question.
2,300.
Fine, 2,300. 2,300. How much are we selling one? You know, this is finished goods now.
Yeah,
How much are
15 naira. No, we are selling at 62 naira.
How are we selling at that? How do we come about that?
Material costs and labor costs.
Fine. This is it. So extract from the standard cost card for vaccine the COVID as follows. Direct materials, traumas, 15 naira we incur for 1 unit, and labor 12. When you add these two together, you have 62. So 62 multiplied by that value, you have what?
1,258,600.
Okay. You have multiplied by 62. Let me bring this here. So you have what? 1,258,600. That is the opening. How many units did we produce?
19,700.
19,700. How much are we still selling it? 62. Overall, how much is that? 19,700 by 62.
1,221,400.
Do we have any closing inventory?
I think yes.
Yes.
Closing inventory. The value is what? What is the value? The units? 15,000 by 62. The result will be what?
930,000.
930,000. So in this case, we have to less our closing inventory. If you've added your closing inventory to yourselves, you less these two, right? You get same results. If you've added closing inventory 930 to 2375 minus 1258 600 minus 122 400, you get same results. So now, when you add these two and less 930, the result will be what?
$1,550,000.
So your gross profit will now be what?
$825,000.
Yes. Then, do we have any expenses we have to deduct from the question that other expenses are paid immediately? What?
As the
in cash. Other expenses are paid immediately in cash, estimated to be what? 200,000. Then do we have depreciation relating to plant and machinery? 55,000. So all these are P&L elements. So we have other expenses, 200,000. Depreciation, I have it as what? 55,000. So when you less these values, you're going to have them as what? Your net profit will be what?
570.
570. The net profit will be 570. So this is what they want you to do as it relates to the income statement. The class has declined. Let me see people that this class now. Mr. Andrew, are you there?
Yes, sir.
You're tired. It's been a stressful day, right?
Yes, sir.
You have to be chattered, don't worry.
You must chatter.
Those are the sacrifice. Madam Ruth, you didn't go to work today, right? You work from home.
I came home like 6:30. I came home like 6:30.
Okay, so
6:30 p.m.
you experienced
It is
right. So I'm going to let me look for another question. We'll close now. Don't worry, we'll close now. Like the question. May 2025. Do I have it? Is the question on
Madam Rose, please
Ma?
kindly mute your mic. Okay, yeah.
Yes, I've done that. Wow. There's a question on 2025 last diet. We treated something like that in our normal class, where we're looking for semi mixed cost, issue of fixed and variable cost. Fixed and variable cost. I think I have that in this slide. Let me go and show it to us. Because there are 4 ways in which question can come in on this topic. So I want us to touch every aspect. Yes, if you look at this is a question. If you recall, we treated this question where we have percentage, 30%, 50%, 75%, and you are required to prepare flexible budgets. So in this question, you have issues of direct material, direct labor, direct expenses, production overhead. In this production overhead, it is not defined if it is direct or indirect. So you need to look for the component of fixed and variable. You know, if it is direct, it is clearly variable because it moves in proportion with the unit produced. But where it is not defined as direct or indirect, and it is just put as production overhead, you need to do what we call cost separation by determining the values, the proportion that is fixed and that is variable. And for you to do that, you use the concept of what? High-low method. High-low method, as you've seen here. Yes, high-low method. So also for administrative and selling overhead, it is not stated clearly if it is direct or indirect, just overhead. So it means you need to do cost separation to know the proportion that is fixed and the proportion that is variable. So if you look at that question, May 2025, it was a repeated question. They pick it up again from one of the recent years and repeated it. So for you to solve that question, you need the knowledge of high-low method and cost separation. So if you miss that class, you can check my YouTube channel. You see the video of this class, of this lecture where we solve this question. Then you can go back to the past question and try to make attempts. And for those of you that have this book, Adeniji, the question is in Adeniji likewise. Yes, something like that, perfectly like that. Is in Adeniji, performance management. But if you don't have it, it's not any issue. Just go to the video, watch, try and make attempts of that question and try to revert back. Another way in which question can come on budgeting is on flexed budget, in which we also treat like 2 or 3 questions. If you look at the past question, you see 2 questions on flex budgets asked of recent. So if you don't know how to treat question on flex budget, please do well to watch the video likewise. We treated that very well in this class. Where is the question on flex budget? Flexed budgets. Okay, I think it's not in this slide. We solve question on flex budgets, and yes, you can see. Okay, flex budgets. This is just some little notes on flex budgets. We treated this question on flex budgets. Then I now gave assignment. Go to the Pathfinder, giving 2 years question. Use this same approach we treated in the class that time and solve those questions. And those that did discover that flexed budget is very simple. Is you trying to make your budget to conform to your actual. Yes, so in case it has eluded your memory on how to solve it, quickly go to the video, watch, and go back and solve the questions on flex budget in the Pathfinder. Then you'll be fine. So please do well to go back to all these things, and we'll get better. In case you've forgotten how to solve questions on flexed budgets, revisit it again. My bishop, hope you still recall how to solve questions on flex budget, sir. It's Taidu.
Bishop.
Bishop is
don't-
not on here.
He said,
I can see him, but I don't think his attention is here.
maybe I sleep off. It's not easy.
It's not easy. It's 10 o'clock. Maybe he's praying.
No, sir. I'm here.
Okay, sir. So maybe you are praying for us, sir. No problem. So we'll call it a day in this class. If you have any concern, just do well to share on the WhatsApp. I might not be available, but in case I didn't see any response from any students, I might decide to respond. Yes.
Okay.
So we'll come up again. I hope to teach FM maybe by tomorrow or next. So I might not come up for PM, but we'll just see how it we work around every one of those things. So that will be fine.